Happy Friday. Hope you're having a great week. Mortgage rates basically flat on the week here and flat today, but we had a lot of data come in today. And one of those numbers was the first reading on Q4 GDP that came in at 1.4% for growth, with the expectation being 2.8. So that was a significant miss on expected GDP growth. And, that's after a very strong number in Q3. Now, we had a government shutdown during Q4, which impacts economic growth. It also impacts the government's ability to bring in and pull in data. So there's going to be multiple revisions on that number. It could change, but if 1.4% were to stand, that was a big miss. That would normally help to bring mortgage rates down. Slower growth is lower inflation, and lower inflation is good for mortgage rates. But we had an opposite effect number today as well. We had the December core PCE number come out, personal consumption expenditures. That's the Fed's favorite gauge of inflation. That came in at 3.0% year over year to end 2026 or 2025. And so that was a miss on the high side, which would normally put pressure on mortgage rates to move higher. But we had that low GDP number. So those two kind of offset each other, and we really had very little movement in rates today. Now, we also had the Supreme Court ruling on tariffs under IEEPA, and those were essentially struck down. Now, where that could really impact mortgage rates is if the government is required to pay back the revenue they took in with tariffs, that they would have to sell bonds, treasury bonds, to pull the cash to make those repayments. That would add supply to the bond markets and could put upward pressure on long-term bond rates. But you could expect there's going to be a lot of litigation and back and forth before anything like that is ordered, but it's something to watch, as that could impact markets at some point down the road. Hope you have a great weekend.